Good evening, this is Nick Imnan from VolumeProfileTrader.com on Thursday, April 12th, and this morning I put out a video talking about the market when it was up marginally. I think maybe 6 to 8 S&P points, something like that, maybe even less. But talking about how the market's rebounding, our thesis that I sent out yesterday, I sent out a video midday saying, maybe the market's giving us an opportunity here, and I was talking about the euro, the dollar, and the S&P 500, and sure enough, that paid off, and that's paid off well. And I'm almost convinced enough that this market has at least 10 more points of upside. Bringing over an intraday chart so you can see what's going on. We have March's profile, we have April's, and then we have the 90-day period. You can see point of control for the 90 days forms at 1365, it's actually at 1363.93. That's what is calculated on Thinkorswim. But it's also the point of control for the month of April, and what we're seeing is a move higher. Now this is excluding overnight, and the reason why I did that wasn't because wasn't for any particular reason other than the majority of the volume occurs at these levels anyways, as far as during the day's session, and I don't want to basically overdo it, and sometimes the chart gets a little messy. It's kind of what I'm saying, but nevertheless, these levels that I'm pointing out still matter. So we're getting a nice bounce off this. But my thesis is this bounce here that we're seeing is going to be strong enough because it's off. This is important. So listen, because it is off of the 90-day point of control, this move has the potential to make new highs. Now that's going to throw a lot of people off because that's the last thing people are going to be thinking. So what our first target is the obvious. Right now we're getting to the bottom of this high volume area, 1388, and really you have the meat of that. You have the point of control of March, 1395, 1396ish. Watch that level. It's important. If we get above that and get up to 1404, we may have a real shot to go higher, and it's just something that you want to look at. Or I should say, be open to. The US dollar, I pointed out this triangle pattern that we're seeing. Another down day for the dollar makes it look like this the dollar has potential to continue lower. Now, what's going to be important for the dollar, looking at the daily or the intraday chart, and yes, I brought over the 90-day intraday again because Forex tends to be more towards 24 hours. But nonetheless, we have point of control for the 90 days. We're bouncing there. You can see we stopped on the dime. We also have some decent volume from March at those levels, up to around 79.53 to 79.25 or so. Pretty good volume, and you can't disregard that. But one thing that I think is more important is, generally speaking, more recent volume is more important than volume that's 3 or 4 months ago. So I'm looking at the most recent months. Both point of controls at the top end of the range, and we're falling from that range. So as much as I want to say that probably want to scale out of some of your positions here when the dollar's at these levels, you have a lot of basically regret of people who have converted into cash up above, let's call it 79.60 for the last 2 months or so, and that's something worth noting. And if you take note of this larger pattern, if we start falling below that 75 on the dollar, why not? The Australian dollar, just to point out, I don't trade the Australian dollar. I don't trade Forex at all. I've studied the euro briefly, but not enough to say that I can take a position in it and feel comfortable. However, it's probably not easier. It's probably pretty simple after a couple months of studying it, especially with the volume profile. But I have to say, Australian dollar looks like it's putting in a bottom here, right at the value area low, this blue line. Here it comes straight down, and now we're getting a nice bounce. Where would you expect a bounce to? About 105 or so, which gives you a pretty nice upside potential. I would kind of look for last month's point of control as a target. And that is, well, the bottom of that high volume area is at 104, let's call it, we'll look at this most recent swing high, 104.60 or 104.6, and upside target 105.22 to potentially 105.60. But I think the point is, where I'm getting is I think you want to stay away from dollars and probably look to put your money, US dollars, and look to put your money elsewhere. Similarly with Apple, I think you can look to put your money elsewhere for now. If we get a move back down to 600 on Apple, that's where you look to be a buyer again. But for now, I do think this is kind of dead money, and what I would recommend is going into some names that I've mentioned over the last week. One, hey, Hewlett-Packard, ding, ding, ding. I hope you caught on. We were buying this, or at least I was, pretty, not aggressively, but enough to be really happy that that HPQ was up 7% today. And hopefully you followed my thesis. We didn't make a new low after earnings, and the point of control was down at the bottom end of this range. So I was nibbling almost every day, and now getting paid off greatly for doing so. If you think it's necessary to take profits tomorrow, go ahead. I don't. I think you have move up to 27, 28. That's in the cards. Bravo if you caught on to this trade. I featured it at least 2 times, so should have. All right. Medifast continues to trickle higher. What can I say? This is a breakout, and as it goes higher, more and more people are going to be catching on. Something to be aware of. Agrium up almost 2% today, off the point of control for the year. Something to note. Another thing to note is you do have point of control, a little bit of resistance up here, so just be aware of that. You want to see it get through these current levels and kind of power higher. Potash, you're getting a small bounce here. It was up nearly 2%, and you have point of control for the month of April down here, but there were a lot of names that were up a lot more. Let's go through a few that I've featured. Tech Resources broke this trend line, up and closed on the highs today, 5.5%. I mean, this is what it's about. This is all based on China and all of that nonsense. You can see it better on the intraday chart. We do have, kind of a ceiling right here, so be careful. Ring the register on some if you think that's necessary. But at the same time, kind of keep your eye on a potential for a move to the low to mid 40s, and the realization that this could break and push back up towards 50. Freeport, huge day today, off of these consecutive lows. I think I talked about this last night or the night before, something like that, and this looks pretty good. CVR Partners, up 4% today. Covered it, want to say, on the 4th or 5th of April. Then the next, if you bought it on the 5th, you had 2 more days to buy it at lower levels, and you're getting rewarded, greatly today. Volume was, decent. It's getting a little better, but you should definitely be profitable in this position. Not LVS. How about just LVS? This was actually a name I took some profits in today, and now my position has gone. I've been holding about a half-size position since, I don't know, somewhere in this 54 range maybe. I don't really remember when it was, but I got to the point where my gains in Las Vegas Sands, I'm basically getting close to hitting my price target. My price target was around the 65 area, and we're getting up there, and I'd rather, as I've said before, I'd rather take profits into strength, and that's just how I feel. The gains on this, percentage-wise, here I'll bring up 33% gains in Las Vegas since we've bought it. So this has been a monster, and hopefully it will continue to work. I have less skin in it, so I could really care less. I know I've had a really nice ride in this, and it's really been one of my best trades for the last 2 years probably. American Express, I continue to think this goes higher. I think that this is has $60. We're $2 away from that, but really up to 70. In my opinion, it's lagged names like Visa and MasterCard, and yeah, the models are a little bit different, but the fundamentals, as far as their numbers, aren't too far off, and I like that, and I think that American Express can go higher. CELG, and I just want to say that we originally got on the CELG boat when it was in the low 60s, right off this 200, right off this point of control, was a really nice trade. And I just want to say Jim Cramer featured it tonight. I just heard it maybe 20 minutes ago on his show, and I think he did a really good job explaining the fundamentals. I'm not very good at explaining that. I can just look at the numbers and get a general idea of what their story is. And if their fundamentals and technicals line up, then hey, I want to be a part of that. The reason why I've picked CELG back in the 60s is because then the PE on it was pretty low, but right now it's trading at a 21 PE and a 43% growth rate. So you can see the PE is generally low for the growth rate. Its return on equity is 30%. Its cash flow, which was better, or is more appealing when it's down in the 60s, but $4.18. It does have a little bit of debt, 23%, but their return on equity is high enough to where you shouldn't have to worry about that. And the most important thing, in my opinion, is their earnings stability is really high. If you look at their EPS over the last 5 years or so, it's just generally gone higher and higher, and there's no drastic change, and that's something that it matters to investors, and people like to see that. So find names like CELG, and as long as the technicals are doing good, you should have no problem buying this thing on dips. Gold, I'm still a believer that this goes higher over the long term, and I'm a believer that this is just one big consolidation. Gold's proving to us right now in price action. We get two big down days and then a reversal. 2 big down days and reversal. And sure, we've made lower lows. But every dip has given you a pretty good bounce. We haven't just gone down in one straight swoop. And that leads me to believe that this downtrend's getting close to being over. And if we get above these moving averages, I'm sure all of the talking heads on CNBC will be talking about how gold was at a buying opportunity and how they were buying below that, basically at the lows. But, they weren't really. They're just saying it. And, now they're trying to scramble and question themselves on why they sold basically at the lows and as it's, going higher. But, enough of that. I do have a position in GLD. It's a decent-sized position, and it's from lower levels, so I'm not really worried. And I have a current call spreads, the 161s, not that, the 161 by 164s. If you want to, I remember I put the same exact spread on, maybe it was on the 29th, something like that. Maybe it was the 22nd. It doesn't really matter. Actually it was on the 22nd. What matters is I kept a small position in that, and most of that got taken off as small profits or a break even, but I kept a small position and wrote it out. Therefore, I can easily add on to it if I still believed on it, And guess what? That position's at over a double now. So it's a little bit of managing your risk and knowing it. Well, it's a little bit of feel, and you have to understand. But it's basically I brought down my leverage so much that I just kind of set it and forget it on that trade. You know, if that small portion of the trade, you know, went worthless, I'm okay with that. But given that there was enough time, when is April expiration? The 20th. So here's the 20th. GLD needs to be basically right here. Come on. Alright. GLD needs to be right here by April expiration. You know, when you look at it on, for example, when it bounces here, you know, that's still a lot of time to get up just a little bit. And that's one of the reasons why I love trading GLD so much in general, especially spreads, is because they trade in $1 increments. So it's, you know, and obviously GLD or gold itself can trade $10 on any day. Guess what? $10 on the gold futures is $1 on GLD. So you can, you know, guess what? You pull up a gold futures chart and you can kind of trade the range. And, you know, sometimes it's not really much more difficult than that. You know, this kind of looks like a mess because of, let's see, hold on, bear with me. Okay, I brought in the basically 24-hour look of gold. But you can, you know, you look at point of controls for months and you kind of go off of them. I remember I was basically buying calls on the way up here, call spreads, and got shaken out of pretty much everything here. Took some profits, but got shaken out of everything. This was the first big down day on gold, which kind of continued this lower draft. But even so, and I was pretty much playing counter trend the entire time going down, but successfully, you know, I think back here, I don't know, it was somewhere right here, bought the 164 by 165 call spread, you know, made say 40 cents off the spread in, you know, one day, something like that. It's trades like those, you know, those base hits that you can do, you fit them to your strategy and they end up working out well, and you find yourself, you know, hey, I don't need an office job because, you know, I'm basically making enough money trading that it's definitely paying for my overhead expenses and then some. So that kind of got sidetracked there, I'm sorry. But just trying to, you know, shed the light of what's kind of possible. Let's see. Really, ConocoPhillips gave you a bounce today. Oracle gave you a bounce, although I don't have too big of a position in that. RIM, don't take your eye off this. This is all I gotta say. It's kind of quietly holding these lows, kind of like hold on, HBQ. Don't take your eye off RIM. And I'm still that call spread 15 by 18. Guess what? I still have a little bit of it, and just in case, you know, it kind of turns around and I want to get more involved. Therefore, I have an easy way to do it. CSX, volume was kind of light. Earnings come out, looks like the 17th or so. And so maybe we get a pre-earnings run. If we go up into 23, I'll probably shed some. Depending on how earnings go, I'll let you know. But I still like CSX long term. Just to look at their, let's see, Kansas City. That's really what we should have been buying. I know that's the growth play, but you know, too bad, so sad. You still can if you think it's going to new highs, which it probably will. UNP, actually, UNP is actually at a really nice spot. You know, you kind of got a double bottom here. You have 150 still trailing up. You have the 200 gradually. You have the point of control for the year. This is a pretty nice pullback, just saying. And last one, Caterpillar. Alright, this was, and it just changed today, 95 or whatever this level is. 96 was the point of control for the year. And we got our bounce. You know, I was saying wait for it to go higher. It got above 104. It went another $2.50 higher. And, you know, if you put on a call spread like the 100 by 105, that should be up at least 20 or 30% from where you put it on. Hey, guess what? Ring that register because there's probably not much left in that spread. So, anyways, that's really it. Kind of stick with what's working and, you know, kind of go from there. Let me bring up the 10-year, hammering up against this top. 30-year kind of failing against this point of control. Hey, guess what? These point of controls, this volume profile thing, it works. Look at this. Sell right into this pressure. You know, you had a long into it. This is actually really one of the best looking charts that you have in terms of levels. 30-year, a bounce off these lows, a higher low, and then move straight into the point of control. What's it going to do from here? It may go higher. It may go back up to these highs, or this may be the you know, lower high that pushes bonds lower. I don't know, and you know, I'm not a bond trader. I just kind of look at it and kind of give my opinion with how volume's setting up. But anyways, I hope you have a good night. Let the market do what it's going to do. If it gets shaky up around these levels, around $10 higher, look to take some profits, but at the same time, we are at the bottom end of the range, and this could easily go higher. There are a lot of names in the market that are still undervalued. So, just my 2 cents.